Welcome to How to Money with Cole and Cole.
I'm Cole.
And I'm Cole.
We coach people every day on their money and how to plan for the future.
As financial advisors, we're here to have an honest conversation and educate you on how to money. Intentionally and passionately to hit your money goals. And we'll throw in some sports talk along the way.
Our mission and goal of this podcast is to improve your money journey and help you create the financial life you deserve.
So let's talk money.
And sports.
Well, welcome back, everybody, to How to Money with Cole and Cole. This is episode number 7. And think about that for a second.
Wow.
Yeah,
And
crazy.
Yeah, we're moving right along. So I'm joined, as always, by Cole Peterson and Cole Jaski from Central Financial Group. How's it going, guys?
Not too bad, Caleb. How are you?
I'm good. How are you, Cole?
You got something important coming up, don't you?
Yeah. I
Like
kind of
8
do.
days?
Yeah, getting married in 8 days. Pretty crazy.
The countdown is on, man.
Yeah.
Doing well. Happy Friday to both of you.
Yeah.
Yeah.
Happy Friday.
All right.
Can't complain. We'll talk about this in a minute, but my favorite basketball team won a championship last night.
Yeah,
So
the Warriors.
yeah, so it's a pretty good day.
Is that 4 rings for Steph?
4 rings.
4 out of
So,
8 years.
Yep.
That's pretty good.
Yeah. They were.
It's tough to do.
I watched all the post game stuff last night, and he was talking about how
Of course you did.
this. Yeah. Well, he's like, this one hits different because nobody thought we'd get back here.
Mm-hmm.
So
Yeah,
pretty
after
cool.
last year.
But so how's things going for you guys in the financial world and all that?
That's a loaded question.
Yeah,
actually.
yeah.
There's a lot going
It's a
on.
little rocky
yeah.
right now.
A lot going on in the universe. You know, the Fed hiked the short-term interest rates 75 basis points this week. We got a lot of volatility in the market, so it's been interesting. To
Biggest
say the
interest
least.
rate hike since 1994.
Yep,
That's
yep.
crazy.
Yeah, and it really doesn't affect your normal day-to-day person, but it is a significant change.
Yeah.
And you're going to see interest rates on houses and car loans, everything like that is going to be on the rise.
Yep.
So what I heard the other day, I mean, they're trying to slow the buying power of the American person so supply can catch up. You know, you can't get a screw basically at the warehouse or the store, Menards or wherever you shop at. So they're trying to slow the demand for all that by raising interest rates. I don't know if it's
very relevant thing going on, right? Because we're all kind of going through it. We're seeing, gas prices really high. Your utility bills are higher. It's for anyone that wasn't really around in the late 80s or was making purchasing decisions in the late 80s or in the 80s. Really haven't seen a super high interest rate or inflationary environment like we're seeing today. So. First time for a lot of us in the industry to go through that type of this type of environment, and quite interesting because it's relevant for about every household. Every household out there has some type of impact, on your day-to-day buying and purchasing power that you got going on. So,
Yeah, I saw gas prices at Quick Star, which has the cheapest gas in town that I found, was still $4.77 the other day.
Right, and we're one of the cheapest states in the United States.
On average, we're one of the cheapest by far.
Yeah,
for sure.
It's crazy.
Yeah. I was watching a TV show with my wife the other day, and they basically said, if you can wait on buying a house, you should wait, and you should if you're gonna buy a car, you should wait. And like me and my wife are both looking at each other. We're gonna do both of those things in the next 2 years, probably. Well, maybe we're gonna wait a little while. So
the tough thing though with housing, I know we're got a lot to talk about here, but there's still if you read anything on housing, there's still such a supply issue. So even with interest rates going up, there's still going to be somewhat of a demand for housing just because purely the numbers of the people coming into the market, like yourself, Caleb, or people that are coming into the buying market, there are more of them than what's of the houses that are being supplied or available or being built still going on. So it's like there's still an issue, a supply demand issue, even with cost of getting a mortgage is much higher than what it was a year ago. Yeah,
it's really just crazy to watch, like just in the last year, how much things have changed even. And it's just like, it's one of those things where it's, kind of disconcerting, but then you're like, it's going to bounce back at some point, hopefully. So
it's not the first time this has happened.
Right.
Yeah. So it won't be the last.
Let's get back to the sports talk.
Yeah.
I believe it was the Warriors and the
Maybe
Celtics. Did somebody pick that on this podcast? I can't remember. Do you guys remember
I
what
don't
you
know.
picked?
Not that.
Not that.
Yeah.
Ding, 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 ding.
Cole
got one right.
Cole Peterson over here.
So
nailing
right
that.
now it's 2-1, right?
Yep. But I
'Cause
got
you
one.
Rory.
I got one pick right though.
Yeah, you
What's
got
that?
Justin Thomas, didn't
Yeah,
you?
yeah.
For the
You
Yeah.
did.
Yep.
That's right.
Yep.
I forgot about that. Oh no, it's
I'm
2-2.
doing
I was
better on the
wondering.
golf picks. The golf picks I'm a little better on.
I was wondering if that would happen, if that would be a
I forgot about
statement.
Justin Thomas. Yeah, you did get that one right. And then Rory's in right now. It's Friday, June 17th, the Friday of the U.S. Open's going on right now. So, okay, we're golf talks next episode. But but Rory's currently in second. So.
Yeah, so we got 2-2, and I totally didn't get any of the predictions right. But except for the fact that I told one of our interns here at Spin, I said at the beginning of the finals, I asked him what he said. He said Celtics in 7. I said Warriors in 6. So I got that part.
There you go.
There you go.
Yeah.
You got that one.
I figured the Warriors would win, and actually, put a bet on the Warriors last night to win. So
I told you guys.
all right.
I told you guys off mic here that I had a trivia question for you this morning.
Oh,
so,
yeah. What's
So
up?
Steph Curry listed at 6'2", won his first Finals MVP.
Yeah.
Who is the only other person that was listed below 6'2" to win a Finals MVP?
Wait, he's only 6'2"?
He's listed at 6'2". They say 6'3", 6'2", so he's
6'3".
Yeah,
I thought he was like 6'5".
But anyways, who this was on? I'm stealing this from
Isaiah Thomas.
I was gonna say
Gosh,
Isaiah
dang it,
Thomas.
you did get that. I didn't know.
That was gonna be what I was gonna say
Good
too.
for you. Good for you. I didn't get. I was thinking Steve Nash was the one that came to mind.
But he never won a
He never,
championship.
he never won a title.
But he was the one that I could only person I can think of. I'm like, gosh, and it was
Cole.
Do I get a win for that one? 7-3.
Well, I was gonna say it, but I didn't want to cut him off. But I was thinking Isaiah Thomas too.
Gosh, I
Cole
thought-
Jasky's like he off air goes, "You guys aren't gonna get this."
No. I thought Cole might get it because that was a little more his. Not to age you here, a little more your era.
Yeah,
so that's what I was like.
more my era. You guys weren't born yet. So.
Yeah, I saw a thing last
Bad
night.
Boys, right?
I saw a thing last night that said Curry joined an elusive club with his 4th title, and they showed the list, and it's like 7 players of guys who've won multiple MVPs and 4 championships, and it's like Kareem, Jordan, I think Kobe, and LeBron, and like there's like one
Bill
other
Russell,
guy.
maybe.
Yeah, Bill Russell, and I think maybe Hakeem Olajuwon.
Okay. Yeah,
Pretty,
he's won
pretty
2.
elite names there.
Yeah. So to be in any list with those guys is
Yeah,
like
that's pretty awesome. That's pretty awesome.
crazy. So yeah, and I don't know if you watched. Did you guys watch the game?
I watched pieces of it, but no, I didn't
Yeah,
really watch it.
I watched the end, and it was just like it. All the guys, they looked like Curry falls on the floor crying because it's like nobody thought. I heard after the game, apparently they were predicted to win 37 games this year.
Wow.
Yeah,
Well, at the beginning of the playoffs, they were +4. They were the 3rd favorite in the Western Conference,
Yeah,
behind the Suns and whoever else. But I was like,
probably the
well, that
Bucks.
doesn't make sense.
Yeah,
Wow.
They did it,
Yeah,
so.
they did it.
Good for them.
They did it.
I know.
Yeah. Well, we got another thing coming up this week is Father's Day, is Sunday. Happy Father's Day to you, Cole, early.
Likewise,
And,
same
wanna
to
say,
you, man.
Thank you. I want to say a happy Father's Day to my dad, Paul Peterson. He's been a great father for me. So, happy Father's Day, Dad.
Likewise to my dad, Mike, and all the fathers out there.
And happy Father's Day to my dad, Josh. He's been a great father for me too. So happy Father's Day to him and all the other fathers we know.
Yeah.
So.
Yeah, no doubt. It's a special day. I usually play the day a golf tournament with my dad. I've been playing every year since I was like 18, basically.
Mm-hmm.
We play the Sac City Open, so I get to spend the day with my dad. And my dad's up there in age, so I don't know how many more years we got left, but we hold that time precious.
That's cool.
Be coming not this year, but we're getting closer in my household to playing the Iowa IGA father son. Son. So probably in a year we'll probably be starting that, and that'll be an annual thing for my oldest boy, and then at some point I'll have 2 boys. I don't know how that
How old's your oldest?
He'll be 6 in July.
Okay.
So and
Gotcha.
he's pretty into golf. So we'll probably wait 1 more year, and then we'll start playing.
That's still down at Jester Park.
Yep, still Jester Park. So that's something.
I've never played in that.
So I'm looking
cool.
forward to that. So hopefully he keeps the interest in golf and wants to play with me.
That's one thing that I look forward to. Obviously, it's years down the road still, but is doing things like what my dad's done with me growing up.
Yep.
Doing things like that with my kid. That's always something I've always dreamed about, look forward to. Especially now that I'm getting into that stage of life. It's like,
Yeah, it is a special thing, that's for sure.
yeah. So, let's see here. Any other things pertinent in the sports world? We're kind of in that summer
Cubs
lull.
stink. My Cubs are
stink.
23-40. Just got swept by the Yankees. About ready to get swept by the Braves. So I don't have much to talk about when it comes to baseball.
You're not excited? You're not excited about your
I'm
Cubs?
excited about the future for the Cubs. This year I'm not excited, but going to Wrigley Field for a game and be able to sit in the stands, eat a hot dog is still fun, but it's a lot more fun when they're winning.
Yep. Everything's funner when you win. So.
Yeah.
Is funner a word?
Yeah.
No.
Funner? More fun. More fun.
Yeah, there you go. More
Yeah.
fun.
Yeah, I'm just
It's more fun.
I'm messing with you.
How about we talk about money?
All right.
Because I think that is why people come here, right?
I think so.
Or they
Yeah,
just come
we
here to
better
hear
do it.
us banter about sports for 10 minutes.
Probably a little bit of both.
Or laugh at us. That's
Right.
probably,
Laugh
get
at our
get
failed
a-
predictions of
Right.
the Bucks are going to finish the Celtics tonight. Or the Mavericks are going to lose to the Suns in Game 7.
Or my pick of Tiger Woods in the PGA and the U.S. Open. He's not even playing this week.
I've done all right on the golf picks.
Yeah, we got a golf guy over here for sure. So
We got lucky. I don't say that's such a lucky thing, but yeah, man, let's talk money. I think we got a great topic today.
Yeah.
today's topic is alternative investments. So we're going to be talking about mainly cryptocurrency.
Yep.
Which I know a little bit about, not a lot about. So I'm definitely curious to hear your opinion on cryptocurrency because I hear a lot of mixed opinion on it, good, bad, indifferent. So I'm just curious about what y'all's take on crypto is. So maybe you can go ahead and take it away.
Let's start, Cole. Maybe explain a little bit about what is just an alternative investment, just in general, not just cryptocurrency, but any alternative investment.
Yeah, so there's quite a few. I'll just kind of give some examples of some different alternative investments. So real estate, that's probably the most common one outside of your traditional stocks and bonds, mutual funds. You consider your house or your home an alternative investment or some type of real estate. REITs, which are real estate investment trusts, another way to get access to real estate, but maybe not directly individually owning the piece of property. Hedge funds, structured products, commodities, gold and silver. That's something that probably people would be, somewhat familiar with. It's an alternative investment, and obviously now relevant one that's on the news. People talk about younger people specifically, and even some older people now. I found, I'm getting yielding questions from all age gaps, but cryptocurrency, and Bitcoin being probably the most popular one, or widely followed one at this point. But there's definitely a lot of those conversations, and obviously we're going through a fairly volatile time in the market, in the traditional stock market as well as the bond market, the cryptocurrency market. So
yeah, and what we use alternative investments in someone's portfolio for is diversification.
Yep.
And I think Cole would agree with this. It's something that you can use to go outside of the normal stock. So when we talk about alternative investments, well, what's a normal investment?
Yep.
A normal investment is your normal stocks, bonds, mutual funds, annuities, things that you basically can get from any financial advisor or buy on your own on a brokerage account, things like that. So when we talk about an alternative investment, it's outside of those type of accounts, basically. Something you have to do outside of those accounts. But we tend to tell people or give people the recommendation to do an alternative investment to diversify their portfolio. So just like you don't want to have all your eggs in one basket as far as having all your money in real estate, you don't have all your money in stocks, bonds, mutual funds, all that stuff. So it's a good way to diversify your portfolio. So when you do see a downtick in the market or in the real estate market, then you have other investments that balance that out. So
generally, right, the diversification topic is not all your assets or your alternative investments, your traditional investments, they all shouldn't be all making money at the same time. Vice versa, the idea is they all shouldn't lose money or lose value at the same time. So if you have one piece of the portfolio that's maybe doing really well, and something else is probably counteracting that, on the other side at times. So it gives you that, times where the market's a little tough, but real estate's doing pretty well at this point, and or vice versa. There's and that's the diversification piece, and then also alternative investments sometimes can produce different income streams or things that where maybe you don't have to rely on some of your traditional investments to live on, where maybe you have some real estate, farmland. That'd be a very common alternative investment for people in our area. They generate cash rent or cash flow on an annual basis that maybe supplies their retirement income. So that's a really common example that we come across in our area with our clientele.
Let's get back to cryptocurrency.
Yep.
Because it is a something. So it's not regulated. So what does that not regulated mean? It means that we can't sell you cryptocurrency. We can't say, hey, we'll take $20,000 of your money and put it in Bitcoin.
Yep.
Me and Cole cannot do that. That is not something that we can do. So it's not regulated by the SEC, FINRA, anything like that. So you basically have to buy it on your own, whether you do it through Venmo or whether you do it through PayPal or whatever platform you want to use. Coinbase, I know, is one that people use. So you have to go on and basically do it yourself. Cryptocurrency is an alternative form of payment. So you told the story about somebody buying a pizza or some hamburgers, something like that with cryptocurrency or Bitcoin, when Bitcoin was like 0.001 a coin basically, and now it'd be worth $1 million. I mean, it fluctuates that much. So it is it's an alternative form of payment that some companies, some places are allowing as payment, just like they allow the dollar, the euro, the yen. I mean, if you think of it, it's a great idea.
Yep.
To me, it's a great idea to have some sort of currency that everyone in the world can use, but at the same time, it's not there yet.
Yep.
To me, it's not there yet. It's not regulated. It doesn't have the stability that other forms of investments do. So, do I tell people to invest in it? I say, yeah, you can do that. I would use your casino money for it. That's kind of what I tell people is, if you want to invest in it, be ready to lose every cent you have, because it's probably going to happen at some point, maybe.
I think it's, it comes back. Yeah, I think we're in the early stages, in my opinion. You hear the decentralization, that term come up quite a bit when, on the news or whatever it is. And that's basically taking the place of the traditional banking, institutions is what it is. It's more, you're taking that place to where, money can be moved, basically electronically, without the need of another party involved there. But yeah, the volatility is the tough piece for me too, is until it becomes more widely adapted, I think you're going to continue to see the volatility like we're seeing now, where speculation, and then obviously you throw regulation in there, things that that aren't happening yet but are probably coming as it becomes more popular. I think you have to be willing to say, hey, if I'm going to invest in Bitcoin or put some money in Bitcoin, it's got to be money you'd be willing to see that could go to zero, or go away. Now, do I think it's going, Bitcoin or cryptocurrency or anything's going away? No, I think it's part of, probably moving forward in the future for sure. But I think the volatility and the risk aspect is very high, and someone's got to be comfortable of understanding, hey, something could drastically change on this because it is very new. So I always tell people to be cautious. We're not the naysayers of like, no, don't do that, but you got to be aware of the risk, and it's just like any other investment. You need to be educated and understand what the ups and downsides of that.
It reminds me a lot of when the .com bubble hit.
Yep.
You weren't in the financial world at that time. I was in college, but just the what's going on right now. There's so much uncertainty with it. Like just when the .com bubble was happening, as everyone's like, all right, there's 100 different tech companies, and some of them were big, some of them were small, just like Bitcoin's big and Dogecoin is small or whatnot. Some of them are going to survive, probably the bigger ones and the more stable Coinbases, but a lot of them will probably go away once it becomes. They've got to regulate it at some point. They've got to do something. I don't know who's going to do it since it's a world currency, but it's got to be regulated in some fashion, so we can get a grip on what it is and what people can use it for.
The regulation has to come at some point, just purely from the tax standpoint too. Of there's people that have went to nothing to multi billionaires, and vice versa. There's a lot of people there's more people that actually, I just read this the other day. I don't know the exact stat, but there's more people that have losses in Bitcoin than gains. Right. So more people bought at the high because more people got in, when the news and, the craze kind of came on where you're hearing celebrities talk about Bitcoin and the news talk about Bitcoin. More people got in at the higher points than obviously the original people that were in it. So there's more people underwater as an investment or have a negative return on it than a positive return on it at this point. But who knows, where that goes. Obviously very still new in the, in this stage. But yeah, it's a relevant topic, right? For Caleb, I know a lot of younger clients always ask about it or ask, about putting it, can I buy it in my retirement account? And yeah, at this point, we cannot. There's been some news, that some of the large 401k platforms at some point are trying to be able to allow some access to cryptocurrency. I don't think that's fully approved or on any one platform yet, but there's been conversations to where that is coming at this point. But as of now, yeah, it's something you kind of have to step out on your own to be able to do that. We can't really provide guidance on it.
Mm-hmm.
Yeah, makes sense. So you said to use your, basically you called it your gambling money to invest in crypto.
Right.
Do you think it'll ever not be like that?
Yeah, I do.
I do too.
I do eventually think it'll stabilize and it will probably follow along just like, the value of a dollar or value of the euro. It will still fluctuate, but it will be more stable and not as highly volatile.
I think it'll be an asset class at some point that we talk about. Like, we talk about, hey, you got your U.S. equities, you got your, your international stocks, you have your bonds, you have your cash. I think at some point there'll be a cryptocurrency, or you have your real estate.
Just like we have real estate.
Yeah, there'll be a cryptocurrency, probably sector at some point. Right. I don't know when that is or when it might be, but the technology is obviously it is widely used across the world. And the more, I read, there is relevance there, but I think there's also a lot of things that need to be, ironed out for the common person to be able to understand it, use it, transact on it, without having to have a really deep understanding, of what the underlying thing, and then throw regulation in there of regulation, of how it's going to be regulated, for different countries, from a tax standpoint or just, daily use standpoint.
So I have another question.
Yep.
So I know a guy, he said he pulled out of his crypto investment last week because it had crashed super bad or something like that.
Mm-hmm.
And then I see you got written down 200 billion was wiped off the entire crypto market last weekend. Almost 50% of its value just this year has been wiped off. So that being said, do you think now is a good time to get in on it? Or do you think it's not going to rebound?
There's not enough history to know when's a good time to get in and get out, because it's so highly volatile that because it dropped 50%, that doesn't mean that it won't drop another 25%. Mm-hmm. Because there is nothing to value it against, and there's not a long enough history. So it's hard for us to say whether it's a good time to get in or get out, because it's not something with enough history.
Yeah,
I always say I agree. I'll agree on that, but I also think if you have, depends on your time horizon and the bucket of money you're using. So if it's your casino money and you're like, hey, I'm okay with this being in there 10 years. Yeah, I would say it's probably historically. Sure. You look at the historical chart. Yeah. Would I put a significant portion? No. I mean, it shouldn't be something, any money you're relying on or retirement-based money. It should be that money that's you could see go to zero and not change your life by that happening. But yeah, if you have a long time horizon, it's just like stock. Stocks at the same point. You look at it now, we're off 25%. It's, it's. Do we know it's the bottom? No, we don't. But it's better than buying 6 months ago when it was at the all-time highs. So it's like no one's ever going to time. The best in the world that all they do is trade stocks don't get it right on the timing aspect. So if you play the timing game, it's always you're going down a slippery slope. If you're going to try to buy, obviously we all want to buy low, sell high, but very few people in the world can actually do that on a perfect basis.
Yeah, because it literally changes day to day.
Yeah.
So and it changes even more when it comes to cryptocurrency.
Yep. Yeah, 66,000 I think was the all-time high on cryptocurrency or on Bitcoin, and it's like 21,000 today, somewhere in that range. So
so it's actually lost more than 50%.
Wow, that's crazy.
Yep.
Well, we're going to take a quick break and hear a word from our production team at Spin Market, and we will be back to wrap up this episode shortly.
This podcast is produced by Spin Market and Digital.
Located in Fort Dodge, Iowa, Spin Market's highly skilled team can help you increase your market by updating your website, improving SEO, designing advertisements, and producing podcasts that will grab the attention of your market.
Contact Spin Market today for all your digital marketing needs at digitalagent@spinmarketwith2ks.com or call us at 515-302-8026. And to learn more, visit our website at www.spinmarketwith2ks.com.
That's digitalagent@spinmarket.com or 515-302-8026 or visit our website www.spinmarketwith2ks.com. All right, welcome back to How to Money with Kole Cole. Thank you to Spin Market for all the work they do on this podcast. So we're gonna finish up this episode. We're just gonna talk about a little bit. We talked a lot about crypto.
Mm-hmm.
Now we're gonna talk about the other alternative investments.
Right.
So a big one I know is real estate.
Mm-hmm.
What do you think about investing in real estate?
So it all depends on your situation, but we were talking about you buying a house. You're getting married and buying a house. Is it a good investment? I think it's a great way to diversify how your investments, how your money is flowing, and what you're putting your money into, because you're going to have some wins and some losses. Some real estate you're going to win on, some real estate you're going to lose on, just like stocks, bonds, mutual funds, everything like that. But it's a good way to diversify your assets. In with the timing of everything, you never know if it's going to be right time. Interest rates are back on the rise. Are they going to go down? Or you don't know. Quick little story is I kind of had forgotten that we had refinanced our house last September. And
good call on that, by the way.
Right. Well, I was just looking at our statement on our house. I didn't even remember what interest rate we got, and it was 2.625.
The 30-year crossed 6%, I think, this week, and it's probably going to go over 7 from the most recent.
Now, did I know? Was I just magically the person that? Let's do it right now. That's going to be the lowest interest rates are ever. No, I had no idea. We needed to refinance. We were at we were at like almost 4%, and I was like, 2.6. Yeah, that makes sense. It's more than 1%. Let's refinance. I didn't know that rates were going to go up like that. But
wish we did. Wish we
right.
Right. Yeah, wish you knew. You could say you could call that. But in all reality, no one knows where that's heading.
No. So, but now we're not only your own house, but real estate. And Cole can talk about this because he has some personal real estate investments, but he also talks to people about real estate investments. So, how does that diversify people's portfolio too? Not your own house, but other real estate.
Yeah, I mean, really kind of think of it. One thing I always think of real estate, it's not, you never know, how great is investment. But if you look at one thing I always look at, and I don't want to get too deep into the, cash flow and things there, but a lot of times you look at real estate that it can pay for itself. That's what a lot of times makes real estate a great investment, like that farmland or whatever it might be, right? It can pay, you can go and borrow the money, and then the income that generates from that property, you can pay down the debt without really having to put any extra into it sometimes. Now, it's not always the case. And then just like any asset class, historically, real estate, stocks, bonds, if you have a long time horizon, you're going to do pretty well. Mm-hmm. Unless you're in a really, you're doing something very niche or very specific that you're taking a really high risk, high reward type. But if you're buying traditional type real estate assets like your home, I just think of my personal situation of the 10 years that I've owned homes, just my personal homes. We've kind of gotten lucky where we've made a little money. We've sold it for more than we bought it for every single time, and that's not because I looked at that as an investment. I'm getting a really good price and I'm gonna sell it higher. No, it's just the housing has naturally gone up. We'll see a little bit of housing increases over time. Now there might be years where it tapers off or goes a little bit lower. But historically, you look at the mountain chart of housing prices or stocks. what do? There's all kinds of, ups and downs and flutters and volatility. We're in one of those volatile times, but over meaningful periods of time, 3, 5, 10 years, you're going to see a steady trend line to the upside. And that's where, real estate specifically, especially if it, you're looking outside of your mortgage, it's something that can pay. If it can pay for itself, you're probably going to do pretty well over, especially of a longer holding period, because it's going to pay down the debt. And then at some point you're going to capture some appreciation just with natural inflation. Historically, inflation's been 3 to 5%. Obviously at a very high point right now, but that will taper off at some point. Who knows when, but it will taper off, and we'll get back to more traditional periods of inflation.
Yeah, I think another alternative investment I get asked about the most is gold and silver.
Yep.
Like, should I invest in gold? Should I invest in silver? And what I tell people, and I sound like a broken record, it's like, yes, but don't put all your eggs in one basket.
Yep.
Diversification. So gold and silver are a good way to diversify your portfolio. They typically go they typically go the opposite way of the stock market. So stock market goes up, gold prices go down. Stock market goes down, gold prices go up. Just in general. But they're a good way to diversify your portfolio, a good way to diversify your liquid assets. If you buy some gold with some cash that you have laying around in your house, having the gold is not such a bad thing because it can increase more than just your cash will at home. So it's not a bad thing. I tell people this though too all the time is like buying just gold is like buying a single stock.
Yep.
Or buying it's like buying water, buying, one thing.
You're speculating on that one asset class
right.
to do well.
Because some people have come to me and be like, should I just put all my money in gold? No, absolutely not. Because putting all your eggs in one basket is one way to either get rich or get poor real quick.
Yep.
So if you want to see a consistent gain over time, you will maybe put a portion there, but not your whole portfolio.
I always try to explain it. It's more going to be a hold of value, versus you're not going to see equity-like returns over a long period of time in the gold or the commodity or the gold and silver, precious metals type market. But historically, periods of inflation, precious metals will do well, hold their value. But you compare them to traditional asset classes, returns over. Again, I keep beating the dead horse with the time frame. But if you have time, that's most younger investors, they have time on their side. The more traditional asset classes are going to outperform over meaningful periods of time of what your traditional, hold of value gold or silver might do.
Right. Yep. Holding gold or silver is like owning a single stock. Like, Would you put all your money into Apple stock right now? I would say most people would say no, because I don't want to own just one thing with $500,000. Yep. I want to own many things, because then if one thing fails, the other ones do well. So
you're purely the price has to go up. That's why for you to make money, and that's always people ask that. I get asked about gold specifically, not so much silver. Every once in a while you have some with silver, gold specifically, and I was explaining I'd rather own a dividend paying stock or a piece of real estate than there, because I have two ways to make money on that versus gold. The only way you're making money is that the price of the value of the physical gold goes up, versus a dividend paying stock or farmland. You can make the appreciation of that farmland's worth 10,000 goes to 12, plus you get the cash rent, or if you farm it, you get whatever income is off that. Same with the dividend paying stock. You can capture the appreciation. Obviously you can get downside too, but you also get the income from the dividend that they might be paying. So there's two ways. So that's where I've kind of tried to shy away. People were doing too much in one, and same thing. We don't want anyone to have exposure to too much one asset class, because then you're purely just speculating that's going to outperform everything else, and that's not a good long-term strategy.
Yeah.
Well, any last thoughts from either one of you as we wrap this episode up?
Stay diversified. Own many different things. And you will do better over time, and you will get through periods in the market like right now in a much better fashion than having all your eggs in one basket.
So I know we're going through a volatile time for any of our listeners, for us personally, but one of the greatest investors of our time, Warren Buffett, right? He always talks about when everyone's saying sell, everything's going, world's ending. That's generally when the best, the smartest and the most rationally thinking people are buying and seeing the opportunities. And it always comes back to time frame. If you've got 3-5 years and you're patient, you're going to do well, especially if you have a good plan, you're diversified, and you kind of tune out the short-term noise. So
I don't know if he's trademarked that saying, but be fearful when others are greedy and be greedy when others are fearful.
Yep.
It's the way to live your investing life.
Yep. Thanks, Caleb. Thanks for the team, man. You guys all, everyone does a great job. So we appreciate it. We appreciate all the listeners.
Yeah. It's great to have you guys on. And thanks to all our listeners. Don't forget to follow these guys on Facebook, Twitter, their websites, LinkedIn.
Yep.
Anything else, anywhere else you can just find them, because
walk into the office.
Yeah.
CentralFinancialGroup.com.
Yep. And CFG4Dodge.com.
Yeah, there you go.
So that's going to do it for episode 7 of How to Money with Kole Cole. Join us next time in 2 weeks for episode number 8. And we will have a undisclosed special guest. So tune in next time. We will see you next time on How to Money with Kole and Cole.
Go Cubs, go.
You've been listening to How to Money with Kole and Cole, the podcast of Essential Financial Group, courtesy of Spin Market. Learn more about the Central Financial Group on their website, www.centralfinancialgroup.com.
For now, I'm Cole.
And I'm Cole.
And we'll see you on the greens.
Securities and investment advisory services offered through Royal Alliance Associations Incorporated, member FINRA, SIPC. Royal Alliance Associations Incorporated is separately owned, and other entities and or marketing names, products, or services referenced here are independent of Royal Alliance Associations Incorporated. Material discussed is meant for general informational purposes only, and it is not to be construed as tax, legal, or investment advice. Please note that individual situations can vary. Therefore, the information should be relied upon when coordinated with individual professional advice. Past performance is no guarantee of future results. Diversification does not insure against loss. Any guarantees discussed refer only to fixed insurance products and are backed by the financial strength and claims paying ability of the issuing insurance company.